How is everybody doing today? Welcome back to another episode of The Banker Next Door. I'm your host, Dr. Joe Berquist. So, the banking industry has its own version of the horror slasher flick, and it is called the ILC Banking Charter, the Industrial Loan Company Charter. It is literally like the Michael Myers or the Jason Voorhees, if you will, of the banking industry. You just can't keep this thing dead. It just keeps coming back like a bad horror movie. Just keeps striking back. So I want to cover that topic today here on this episode, and we're going to take a look at two things. We're going to look at an article from Investopedia, which basically explains a little bit about the ILC charter, why banks don't really like it, haven't liked it for a long time. And then we're going to take a look at a recent article from Bank Director, which basically talks about the motor vehicle companies that have recently applied for an ILC charter and basically what's kind of going on in the current realm, if you will. So, okay. So let's jump into this. So this is from Investopedia, and this is basically called Industrial Banks and Loan Companies Overview and Criticism. So an industrial bank is a state-chartered financial institution usually owned by a commercial firm that is not regulated by a federal banking agency. And now you might understand why banks don't like this. Industrial banks accept customer deposits and provide loans for consumers and small businesses. Industrial banks are also known as industrial loan companies, ILCs. Industrial banks are only chartered by a few states. The state of Utah provides the majority of charters for individual industrial banks in the United States. So some of the key takeaways. So an industrial bank, also referred to as an industrial loan company, ILC, is a state-chartered financial institution usually owned by a commercial firm that is not regulated by a federal banking agency. Industrial banks are only chartered by a few states. The state of Utah provides the majority of charters for industrial banks in the U.S., and industrial banks have become controversial because they allow non-financial companies to offer banking services without oversight by the Federal Reserve. So understanding industrial banks. So industrial banks were originally founded in the early 1900s in order to provide low to moderate income industrial workers who were unable to qualify for credit at traditional lending institutions with a means to access capital. Industrial banks are regulated by state regulators and by the FDIC. Because of their distinct corporate structure, industrial banks can be owned by companies. They are not subject to some of the regulations that govern traditional institutions and do not have to comply with the Bank Holding Company Act. In addition, industrial banks do not face supervision by the Federal Reserve. As a result of this lack of regulatory restrictions, many financial technology companies and investment companies have started to apply for industrial bank charters. So while industrial banks have limited banking powers nationwide, they generally maintain the same powers and privileges as a traditional commercial bank. Industrial banks are controversial amongst those who support a more stalwart division between banks and commercial firms. Criticisms of industrial banks claim that they provide companies with the privilege but not the supervision of a bank charter. Criticism of industrial banks. In 2005, Walmart Inc. filed an application to form a new industrial bank for the purpose of reducing credit and debit card transaction fees. This triggered widespread opposition and protests from commercial banks and financial regulators. The FDIC eventually placed a temporary moratorium on industrial bank applications in 2006. At the same time, state-level legislation was passed that would block any prospective industrial banks from opening branches in different jurisdictions. Walmart Inc. withdrew its application in 2007 before the FDIC could make any decision regarding the status of their application. Opponents of Walmart's application claims that the company's engagement in the business of banking poses a threat to the banking system and to the FDIC Deposit Insurance Fund. In early 2019, lobbyists from the ICBA distributed a policy paper that called for a moratorium on providing federal deposit insurance to industrial banks. Their actions were motivated by a new wave of fintech companies, including payment processor Square, that have submitted applications for state bank charters. A bank charter would allow Square Inc. to provide loans and other financial services directly to its merchants. However, ICBA claims that industrial bank charters are a loophole that Congress needs to address. Not only would fintech companies who receive bank charters be exempt from supervision by the Federal Reserve, but they also wouldn't be required to disclose any non-banking related commercial activities. And I think that, okay, so that's it for this. And now we're going to go take a look at this new article. But before we jump into that, I just want to say a couple of things on this. So obviously, banks have feared for a long time that either Walmart or Amazon would jump into one of these ILC charters and basically would start, providing a ton of banking services, provided, obviously deposit accounts and things of that nature. Now, Square or Block already does a lot of this stuff. They have deposit accounts, they offer loans. But a lot of the loans are more of the online lending variety, and Amazon does loans as well. I think Amazon, they've already generated billions of dollars worth of loans. So the ILC charter is one that has been out there for a long time. It has been very controversial for a long time. And basically, the banking industry just maintains that, like, hey, we just want a level playing field. Like, in other words, if you want to get the ILC charter, like, that's fine. But let's just say you have to comply with all of the regulation that everybody else wants to do. Now, a lot of the fintech lenders that came in around 2018, 2019, 2020, sniffing around, trying to see if they could get that ILC charter, that was kind of the holy grail to them, because it was a way for them to get into the banking business, which they have always desired to do, to disrupt the banking business. But the thing that stops them is two big things. The valuations of bank stocks and the regulation. That's what stops them cold, because traditionally, if you look at it, like take PayPal, for example, like PayPal stock versus a traditional bank stock, okay? The valuation, in other words, if you're a high-flying fintech company or you're a unicorn, whatever, your valuation is going to be much higher. It's going to afford you a much higher stock price than, say, a boring bank that's been around for 100 years, pays out a 4 or 5% dividend, makes money every year like clockwork, but doesn't, it's not really exciting, not a huge growth prospect. Therefore, the stock price is more stable, doesn't really have much in the much gyration, if you will. Doesn't have a tremendous amount of upside, but you like the dividend. That's why they pay the dividend. And basically that's the question. Like, if you're PayPal and you become a bank, basically, does that then bring your valuation way down? But the you can look at it almost like a vampire in sunlight. When those fintechs, when they get hit with that ray of sunshine from the regulators, they're I'm dying. They hate it. Now, I will say SoFi is a great example, though. SoFi did buy a bank and basically has a bank charter now. And SoFi, and I've been watching SoFi closely, they have become incredibly successful, and good for them. But I think SoFi did it the right way. They bought an existing bank. They have an existing bank charter. They now have to comply with all the regulation anybody else does, and that's fine. To me, that's totally okay. But I do think ultimately this ILC charter does need to be closed. It needs to be gotten rid of. But anyway, I digress. Let's take a look at this article real quick. So, companies brush off plans for industrial banks. So, 2 automakers have applied for an industrial loan company charter since President Donald Trump has taken office. Experts predict this is just at the beginning. So, the financial services sector is bracing for the potential of more companies being approved for industrial bank charters, or ILC charters. So there will be more of them, more applications and more approvals, said Matthew Bizant, a partner at the law firm of Mayer Brown, who advises banks on regulatory issues. The first Trump administration was supportive of it. The second Trump administration has also been enthusiastic about novel bank charters. I think there's some caveat there. It's like, yes, they do want bank charters. They do want de novo activity. See yesterday's episode on de novo activity, by the way. But are they going to be full bore and full gung ho with these ILC charters? I don't know that to be true. There are currently 26 ILCs clustered in a handful of states, including Utah and Nevada, that allow for these charters. According to Michelle Alt, a partner and advisor in investment firm Claros Group, Thrivent Financial for Lutherans was the last entity to receive an ILC charter in June of 2024. Alt says before that, Nelnet, a student loan servicer, and Block, a fintech payments firm formerly known as Square, both received an ILC charter in 2020 during President Donald Trump's first term. Companies may seek out this type of charter for a number of reasons, including the ability to gather deposits, usually a cheaper funding source to support lending activities. These deposits are typically brokered or intermediated intermediated deposits. The ability to do certain banking services in-house is also attractive. ILCs can issue credit cards, for instance, making this charter appealing to certain retailers who might be interested in issuing credit cards directly for consumers to purchase their products. That eliminates the need for the company to work with a bank. But these charters also have some restrictions, namely that ILCs can't accept demand deposits. Companies also face additional costs needed to meet any regulatory scrutiny they may face with an industrial bank charter. So ILCs are the holy grail for non-banks, Alt said. Yes, that's true. That's because ILCs are exempt from the Bank Holding Company Act. They aren't subject to consolidated supervision, and the parent company isn't subject to supervision by the Federal Reserve. That's a huge burden. In terms of the current pending applications, Ford Credit Bank submitted its application in July of 2022. GM Financial Bank and Stellantis Bank USA, which is affiliated with the owner of Dodge, Chrysler, and Jeep, both filed theirs this year. So three automotive companies basically trying to get in on the action here. So ILC charters are appealing to car manufacturers in particular because they can use the bank to provide financing to consumers looking to buy vehicles or to its dealerships needing capital to purchase inventory. There is also a history of car manufacturers getting charters. BMW and Toyota already have ILCs. Ally Bank started out as the banking unit of General Motors before it changed its name from GMAC Bank and was spun off in the aftermath of the financial crisis. That's because it failed. Ford Credit and Stellantis both declined to comment for this story. GM previously applied for an ILC in December of 2020, but withdrew its application in June of 2024 after receiving conditional approval for the charter from Utah banking regulators to address feedback provided by the FDIC. The White House appointed Travis Hill, acting chairman of the FDIC, in January of 2025, and he vowed that the agency would take a more open-minded approach to innovation, complete a wholesale review of regulations, and withdraw problematic proposals. So last year, as vice chair of the FDIC, Hill voted against a proposed policy that would require the agency to determine whether an ILC could meet the lending needs of its community and that would require an ILC to operate separately from its parent company. That's in contrast to Hill's predecessor, Martin Gruenberg, who served as SEI chairman under President Joe Biden. Gruenberg was widely seen as opposed to ILCs and less likely to approve these charters. So beyond auto manufacturers, it's likely that mid-sized fintechs that already do some lending, embedded finance, or are involved with banking as a service efforts could see value in having an ILC charter and apply for one, says Hay, who spoke generally and not about any specific company. That could be especially true for a fintech that serves the underbanked and that targets smaller loans. So, but basically says, regardless of where the next wave of application comes from, it's likely that the banking industry will push back. Historically, banks have been opposed to new ILCs. Concerns center around consumer protection and ensuring a level playing field in terms of regulation. Yes, I would definitely agree with that. So we have been happy to see bipartisan support, Kenny, as I think members on both sides have concerns about mixing banking and commerce. So again, an interesting article there from Bank Director, but I thought this was a great opportunity to just give everybody a little bit of background on ILCs, why there's so much controversy around them, some of the history with them, and what was going on at the moment with basically a bunch of auto manufacturers coming in and applying for these types of charters, why the banking business is not really that crazy about it, and why you're going to see a lot of pushback from the industry if the number of non-banks applying for ILC charters, dramatically increases in the future. Like we start to see 20, 30, 40, 50 applications from non-banks. I think the industry is going to be in a huge uproar. So, but anyway, hope you found this episode interesting today. I will wrap up by saying, if you like this episode, please make sure to like, share, and subscribe, as that helps the channel. Remember, we are on YouTube, Rumble, and all major podcast platforms. Please be sure to leave your comments down below, as I always love getting back to everybody. And as always, make sure to check out some of the other episodes on the channel. I hope everyone has a wonderful day out there, and I will see you again